If you are expecting a Social Security payment in June 2025, there are critical changes you need to know about right now that could directly affect when and how much money you receive. In the next few minutes, I'll walk you through the complete June 2025 payment schedule, reveal why some recipients might have up to 50% of their benefits withheld, explain the new identity verification requirements that could delay your payments, and show you how recent staffing cuts are creating massive backlogs that might impact your claims. Welcome to Financial Area, where we break down the financial news that matters most to your wallet. If this information helps you stay ahead of changes to your Social Security benefits, hit that like button and subscribe for more updates that protect your financial future. Let's start with the June 2025 payment schedule, because timing is everything when you're depending on these benefits to cover your monthly expenses. If you receive SSI, mark your calendar for May 30th. That's when you'll get your June payment. And it's coming early because June 1st falls on a Sunday this year. The Social Security Administration always moves payments to the previous business day when the scheduled date falls on a weekend or holiday. For regular Social Security recipients, your payment date depends on your birth date, and here's exactly when you can expect your money to hit your account. If you were born between the 1st and 10th of any month, your payment arrives on June 3rd. Born between the 11th and 20th, your payment comes on June 11th. And if your birthday falls between the 21st and 31st, you'll receive your payment on June 25th. But here's where it gets more complicated. If you started receiving benefits before May 1997, you get paid on the 3rd of every month, regardless of your birthday. So those long-term recipients will see their June payment on June 3rd. Now, let's talk about that 2.5% cost of living adjustment that kicked in this January, because the reality might be different from what you expected. This COLA increase raised the average monthly retirement benefit to approximately $1,976, up from about $1,927. That's an increase of roughly $49 per month for the average recipient. However, here's what's frustrating many recipients. While their Social Security checks got bigger, so did everything else. Grocery bills, utility costs, housing expenses, and medical costs have all continued climbing. Many recipients are telling us that even with the 2.5% increase, they're actually falling behind financially compared to where they were a year ago. The COLA is supposed to help maintain purchasing power, but it's based on inflation data that might not match the real-world expenses that seniors face daily. This brings us to a policy change that's causing serious concern among recipients: the Overpayment Withholding Rules. The Social Security Administration has reinstated a policy that allows them to withhold up to 50% of your monthly benefit if they determine you've been overpaid at some point. Here's how this works and why it matters to you. Sometimes the SSA pays out more than someone is entitled to receive. This can happen for various reasons. Maybe someone continued working while receiving disability benefits and didn't report their earnings properly, or there was an error in calculating benefits, or someone received benefits for a deceased spouse without properly notifying the agency. When the SSA discovers these overpayments, they want their money back. Under the new policy, they can take up to half of your monthly benefit until the overpayment is resolved. Now, this is actually an improvement from what they were doing before, when they could withhold 100% of benefits, leaving people with nothing. But losing half your monthly income is still devastating for most recipients. If you receive an overpayment notice, don't ignore it. You have options. You can request a waiver if you weren't at fault for the overpayment. You can appeal the decision if you believe it's incorrect, or you can negotiate a payment plan. But you need to act quickly because the longer you wait, the fewer options you'll have. The Social Security Administration has also implemented new identity verification requirements that are adding complexity to the application process. Under this new policy, some beneficiaries must verify their identity in person before they can apply for or receive Social Security benefits, particularly if they didn't apply online initially. This means if you're applying for benefits and the SSA has any questions about your identity, you might need to visit a local Social Security office with documentation to prove who you are. For people living in rural areas, this can be particularly challenging since the nearest office might be hours away. The agency says this is necessary to prevent fraud, but it's creating additional barriers for legitimate applicants who need their benefits. The verification process typically requires multiple forms of identification, And if you don't have the right documents, or if there are discrepancies in your records, the process can drag on for weeks or even months. This delay can be financially devastating for people who are counting on these benefits to pay for basic necessities. These service delays are being made worse by significant staffing cuts at the Social Security Administration. As part of government efficiency initiatives, the agency has seen over 3,500 employees retire or leave their positions. While reducing government spending might sound good in theory, the practical impact is that there are fewer people available to process claims, answer phone calls, and help beneficiaries navigate the system. The result is longer wait times for everything. Phone calls that used to be answered in minutes now take an hour or more. Claims that previously took weeks to process are now taking months. If you need to visit a local office, you might wait weeks just to get an appointment. These delays aren't just inconvenient. They're creating real financial hardship for people who depend on these services. The backlogs are particularly problematic for disability claims, which were already taking too long to process. People applying for disability benefits often wait over a year for a decision. And with reduced staffing, these wait times are getting even longer. During this waiting period, applicants often exhaust their savings and face serious financial difficulties. For those of you planning your retirement, there's an important milestone to understand. If you were born in 1960, your full retirement age is now officially 67. This means you can claim your full Social Security retirement benefit without any reduction once you reach age 67. You can still claim benefits as early as age 62, but your monthly payment will be permanently reduced if you do. Understanding your full retirement age is crucial for maximizing your Social Security benefits. If you delay claiming benefits past your full retirement age, you can earn delayed retirement credits that increase your monthly payment by about 8% per year until you reach age 70. For someone born in 1960, waiting until age 70 to claim benefits instead of claiming at 67 could increase their monthly payment by about 24%. Finally, let's address the ongoing issue of federal taxes on Social Security benefits. While there have been various proposals in Congress to eliminate federal taxes on Social Security for all recipients, no legislation has actually passed yet. This means if your total income, including Social Security, exceeds certain thresholds, you'll still owe federal taxes on a portion of your benefits. For individual filers, if your combined income is between $25,000 and $34,000, you may pay taxes on up to 50% of your Social Security benefits. If your combined income exceeds $34,000, you could pay taxes on up to 85% of your benefits. For married couples filing jointly, these thresholds are $32,000 and $44,000 respectively. This tax situation catches many retirees off guard because they assume Social Security benefits are tax-free. If you're working part-time in retirement, receiving pension income, or have significant investment income, you might owe taxes on your Social Security benefits. It's important to plan for this possibility and potentially make quarterly tax payments to avoid a large tax bill in April. The key takeaway from all of these changes is that staying informed about Social Security policies is more important than ever. The system is becoming more complex, wait times are getting longer, and new requirements are being added regularly. By understanding these changes before they affect you, you can better plan your finances and avoid potential problems. If you found this information helpful for planning your Social Security strategy, make sure to like this video and subscribe to Financial Area for more updates on policies that impact your financial security. We'll continue monitoring these changes and bringing you the information you need to protect your benefits and plan for your financial future.